Good evening and welcome back to the Australian Stock Market Show. My quote for tonight comes from American chef and TV personality Anne Burrell, who said, "Part of being successful is about asking questions and listening to the answers." We know that the majority just watch this show and listen to the answers we give each and every week. However, passively listening each week does not lead to success. So if you're serious, you need to be prepared to put yourself out there and ask us your questions. Each week we give you this opportunity as you can write to us, or better still, call into the show and ask those questions that matter to you most. Our promise is to give you a response that will help you move forward. Tonight, Dale and I have a goal to help you as we give you our upfront, no BS approach to all things stock market. For our main topic tonight, we look at the best stocks under $20, so stay tuned. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening, Mr. Gillham.
Good evening, Ms.
I thought I'd
Cox.
go a bit formal.
You're going to be formal tonight. Have I got the right suit on?
I don't know, the tie's a bit blue.
Well, I'm not.
Yeah, that's good to hear.
I'm definitely not blue.
Yep, great.
What's happening in your world?
Oh, look, I mean, it's just glorious weather, isn't it, down here in Melbourne? I think that's the best way to describe.
Well, it's sunshine and rain, and that's just the first hour of the day.
But the funniest thing is that each time I go out the door, it doesn't rain. So I think there must be, the clouds are, parting it when I go out the front door.
Well, you are my little ray of sunshine.
Oh, jeez, thank you. Don't go there.
Don't go there. God.
Oh, goodness me.
All right, I better get to be serious anyway. But before we do get into our first segment for tonight, again, we're going to take some live calls on the show. So if you want to chat to Janine and I and ask us a question, then this is your opportunity to pick up your phone and give us a call now. The number you need to call is 03 for Melbourne 92909988. That's 03 92909988. Now, to get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. Now, I know you want to chat with Janine, so pick up your phone and get dialing now.
While we wait for you to call, it is the third Tuesday in the month, and this means that we take a look at the world markets. So let's get into the charts.
Now, on your screen is the watch list of all the world markets, and I'm going to put my glasses on before I put my foot in my mouth. It's the yearly. I get my foot in the mouth all the time.
Yeah.
I have put my foot in my mouth so much I really should have foot and mouth disease.
Oh, that's a terrible thought. Terrible thought.
Okay,
actually, at the childcare centre, they said that a child had foot and mouth, I think, about a week ago, and I looked it up online. It's pretty terrible.
I see children with their foot in their mouth all the time. What's so different about that? Can we get onto the watch list?
All right, let's do this. Okay, first on the list is Straits Times Industrial Index.
Singapore.
Now, this is up 4%, so Singapore's looking quite good. Interestingly, that the Singapore market, and we're going to talk about that shortly, it's dominated by real estate.
Is it?
That's one of the areas. Anyway, we'll get into the other areas when we get to the chart. India is actually doing okay. They're up 1.98%, go India.
Yeah, FTSE.
And the FTSE is up 1.69. So interesting that the European market is holding up well. We know that the FTSE has just really traded sideways over the long term, but it'd be good to see it break to a new high at some point.
Yeah, when you've got Asia all doing reasonably well.
Yeah, so Asian markets and Australia, they're sort of holding there, but when you get down to the Australian market, it's still down. We're down, the All Ordinaries is down 5.8%. The Dow Jones Industrial Average down 6.6%, so we're sort of holding the line with the Dow.
Yep.
And then we come down further, we've got the European markets, we've got the CAC down 8.7%, Europe itself not minus 9.4%, so we're really getting into the negative territory as we go overseas there. So S&P 500,
that's come
America,
back a bit, hasn't it?
Yeah, it's come back, still down 10%. The Shanghai Composite Index down 10%. I mean, we've seen rebounds on markets across the globe, haven't we? So this is why we're seeing a bit of an improvement here. The DAX is actually still down, and it's down 13.36%. Hang Seng's actually down almost 15%, but look at the NASDAQ, still down, but great improvement on what it was. So we're talking minus 16% at the moment.
That's a great improvement. But you think, look at the Shanghai Composite Index, down 10.2. I mean, if you just look at...
Sorry, Which one?
The Shanghai Composite.
Oh, yeah.
I was saying, if you look at some of the news that's coming out and you see it on LinkedIn or social media, you think, China hasn't paid its power bill, they're about to shut everything off and everybody's going to leave the country. It's going to be that doom and gloom. But can't be that doom and gloom if it's only down 10.22%.
Well, that's true compared to other markets.
Yeah. So what charts are we going to have a look at?
All right. So let's first have a look at the NASDAQ Composite Index, which we were just talking about a moment ago, and I'll just go to the monthly chart. Now, we know that the US markets are dominated by tech-heavy stocks, and you can see there...
the top 10 stocks are pretty,
Yeah, the top 10. So you can see there that I've got a line of the index for the tech stocks or the tech sector in the US that tracing over the NASDAQ, and you can see there how that fits in. And I think looking at the chart, there's potential good upside still on this market in the short term. So I'd like to see a bit of a further rise. We don't know whether it's going to take out the high yet, but it really depends on how it behaves around about the 15,000 mark, around 14,500.
Okay.
Yep. Okay.
Yep.
So that's the US tech market. So then we're looking at the, I've just shown you the technology index. So that was what I was looking at before I came onto the show. I just thought I'd show everybody here what happened.
Technology index.
This is
now.
technology index. So we're not talking about the world market, but just to digress a little bit because we've just shown a chart that relates to this. So during the GFC, we saw this drop 60%.
Yep.
Now, so what I did is I looked at this and thought, well, the market, this area of the market was already down 40%, as we know, in this recent fall. But is it possible that it could fall the same as it fell during the GFC? Now, there's a lot of doomsdayers out there at the moment.
Oh, huge.
But, we don't even know what's going to happen yet until we give the market a chance to rebound. So we need to do that first to allow it to do that. And then, if the tech sector goes up strongly, which I think this is what we're going to see, a nice strong move up to around probably 8,500, maybe a little bit more, depending on how strong the move is. And then if we see it go back strongly below 7,000, we know that there's a potential for that move down. But don't try to actually, read into it something that's not actually showing there yet, is what I'd be saying to people.
And people are doing that at the moment. I only saw it this morning. I was just, I was on YouTube and I saw this video from Robert Kiyosaki. He's been predicting the biggest meltdown the world's ever seen since the GFC, since not long after the GFC for a decade. And now he's saying it's going to happen in the next 3 months. And I'm thinking, nobody knows that. Nobody's that good that they know that. Now, there's a lot of doom and gloom out there. I
think we're more likely to see rises in the next 3 months, and before we know whether it's going to.
That's what I'm thinking. It's like, is that a lot of smoke and mirrors while people are doing deals in the background? You know what I mean?
Well, that's
keeping
right.
everybody fearful and retail clients being fearful while everybody else is out there buying.
Possibly.
I don't know. Anything else you want to show us before we finish?
I do, but have we got time for one more?
Don't ask me. Ask the boss.
Okay, the boss just spoke. All right. Now, what I said I would do is have a look at the Straits Times Industrial Index. Okay.
Yep.
So the code for that is STII. Now you can see it's really done nothing over the past few years. The shape of this was sort of like our market, but it squashed flat. Yeah, so you had that initial rise after the crunch in the GFC, a bounce down, and then a fall we've seen into COVID. But see, it's dominated, it's the top 30 stocks on the Singapore market, dominated by real estate, banks, shipping, oil and gas.
Interesting. Ours is dominated by financials. US, the top 10 is dominated by tech. And obviously this is interesting. Real estate, banks, shipping, oil and gas don't necessarily surprise me because obviously it's such a busy port, but real estate does.
Okay.
But anyway.
Well, look, we still need to see this market break above that recent high there back in, February, before we know where it's going.
Fantastic. Well, that's it for the world markets, is it?
That is it for our thoughts on world markets. You took it right out of my mouth. Good.
Now it's time to get into our first email for tonight. And our first email question is from Mandy, who says, "Hi Janine and Dale, hope you're well." Yes, we are. Could you please have a look at the stock DEV? I have been following it for a while to determine the bottom, and it just went up so fast yesterday. Is it too late to get in now? Many thanks, Mandy.
All right, now this is an interesting one, but look at the, I'm just trying to click on the chart there. You can see from the volatility of the monthly bars how liquid it's probably not. But, we have seen this strong rise this month. So, Mandy, although it's looking nice now, it's been in a trading hold, and it looks like it's gone into another one. So I just had a look today at some announcements. So let's go back to the weekly chart so we can have a bit of a look. Oh, that's the daily chart actually. The 8th of August there was a trading halt. So I just want to show that for a minute. We'll just expand that up. So you can see back here, there was this, on the Friday the 5th of August, the stock was actually sold down, and then it gapped up on the Tuesday when it opened up again. So on the Tuesday there was an announcement about uranium, a uranium discovery. So now the company is actually going into a trading hold again because they're doing a capital raising.
So the question was, is it too late to buy? And I think if looking at this stock, if you're asking that question, it's probably not a stock you should own.
Well, it's extremely, let's have a look at this, the weekly chart. Look how volatile it is. It's extremely volatile. And that's the point of what you're saying is it's because of the risk. I mean, we're talking about 35% in a week.
Yeah, if you have to ask this question on this stock, then you don't have enough knowledge to trade the stock.
Yeah, I mean, when stocks go in trading halts, the problem is that you just don't know what's going to happen afterwards, and it needs time to settle down after this has happened. It could just rocket off because it's a small stock, but then how do you buy into it?
How do you buy in and how do you get
point?
out? Yeah, so it's a bit too...
So look, you've got to have a good set of rules. You've got to think about, well, what decisions am I going to make if I do buy it? How am I going to get out of it? And make sure you've got a stop loss.
All right, that's it. We've got a caller today or tonight, Janine. We welcome to the Australian Stock Market Show. You're on with Dale and Janine. Who have I got on the line?
Dale, it's Shane calling from Queensland. Good evening.
Good evening, Shane, and welcome to the show. You've got a question for us tonight?
I have indeed. BBUS, which is an actively traded ETF fund that effectively shorts the S&P 500. There's a consolidation of the shares or the ETFs that you buy online. So only the 1 year chart is really, effective. But as it comes down towards $8, it bounces. But then when I put the S&P chart over it, it doesn't necessarily correlate. And I'm interested in it, but I'm really struggling to make head nor sense of the correlation between the two charts because I thought it would have been directly inverted, if that makes sense.
Yeah, it does, but it doesn't actually work that way, mate. It really doesn't.
No.
When you're looking at hedge funds and you can't, whilst you think it would ought to do what you're saying, it's not always the same, or not always apples and apples, if that makes sense. Okay,
so I'm thinking about it the wrong way.
Not necessarily, it's just you're being logical, and sometimes the market, when you're looking at some of these products, especially the hedge funds and everything else, you've really got to get into how they're doing it and get into their fine print and everything else. But did you want to say something?
Look, I just want to clarify, because is this BBUS .ASX? So did you say beta shares? Is it a beta shares?
The beta US.
Okay.
Strong Bear Fund, I think. It's actually.
I've got that up on the screen if everybody wants to have a look at it now. So I thought I'd chat a little bit more about it, if that's all right.
Go for your life,
Shane.
I'll shut up.
Yeah. So look, I mean, I guess the challenge with buying into these types of things, it's, in my opinion, is really a mug's game. Because what you're trying to do, are you actually going long on this, or what's your direction?
Well, yeah. So what I've been doing is
buying. You've been buying positions.
I've been buying around the low eights, and I've been quite successful over the last year. So they hold a fair bit of cash, and it looks like when at certain points in the market they buy short positions, then they profit off those short positions, and then they release a dividend.
I mean, look, just logically looking at it, because I haven't gone and looked at this particular one, but it keeps going down. There's no real direction there. Like you've said, it's sideways, and it's a bit of a mug's game trying to just trade something that's just going up and down sideways, and then all of a sudden it might shoot one way or the other, and you're just taken by surprise. I mean, it's not the sort of thing that you're going to actually be able to trade easily. If you're looking at what's happening on the US market at the moment, let's take one of the funds, the US funds that's trying to replicate the market. Look at these nice strong rises. Wouldn't you rather be buying into something that's actually trending beautifully like that? I mean,
I would be, yeah.
I'm not saying I want to buy a fund, or you could just buy a stock that replicates the market. But, it's really, I'd want to understand why he'd even want to buy something like that.
Well, everybody's got their own reasons for buying things. And if you think, if you're very bearish on the market, you're thinking, and it's really understandable at the moment with, there's so much crap out there telling everybody that the market's going to melt down in the US. Not so much Australia, but are you hardly hearing it for Australia? But the US definitely. Inflation, blah 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 blah. There's a whole plethora of stuff out there, and so many experts out there calling that the market's going to melt down. And to me, if you saw on the news every morning, you're saying, "Hey, we're heading for World War III," probably happen in the next couple of months. What would you be doing? You'd be building bomb shelters and stocking up on toilet paper and all the other stuff, but I don't see that happening right now. And to me, is if everybody's scared of the market, then how does it crash? Because they've already done what they had to do. They've already put the bomb shelters in place for the US market to fall apart, and all the big funds are doing that, and all the big players would have done that. So they've already had their moves done, and the market's going up. So what does that tell you?
Well, exactly.
So I don't know. I'm not sure whether I believe
when it comes to these type of things, they can be good for hedging.
Good.
If you actually pick the direction right.
Absolutely. Cool. But they're not like a short-term play, I think, are they?
I think they're more a short-term play.
They're more of a short-term play. Okay. Well, there you go. Well, I read between the lines.
And that's what he's doing.
He's doing it, so he's doing it. All right. Cool. All right. I'll shut up now.
All right. Before we get into our next email, if you enjoy watching our show, then hit that button now. Our next email is from Marita. Hello there. With the market going up yesterday and today, do you think it would be a good idea to sell off half of my shares making a profit? This way, if they continue going up, I'm still benefiting, and if they go down, I can buy back in. Thank you for your valuable YouTube information, and I can't wait till my book arrives. Regards, Marita. Thank you so much for your question, and great to see another lady out there writing into us.
Wow.
So there you go.
Interesting question.
So what's your verdict?
It's a knee-jerk type of reaction, isn't it? It really sounds like it. I mean, again, it's about that whole news, listening to the news. I think if I just could turn off the TV and stop all the newspapers, I'd be a better trader all the time.
Well, people would be a lot less stressed, wouldn't they?
They'd be a lot less stressed, because I see it all the time with the comments on the YouTube channel and on our Facebook pages and all that. People just going, well, this is happening around the world, and this means this and this means that. And I went, well, what does that mean to the price of...
But I think the really great thing about what Marita's thinking is the fact that, and I don't want to, just put words in your mouth, Marita, because I'm sure you've got your own ideas on what you're wanting to do here. It's the fact that she's thinking about what the strategy is going to be to manage what could be happening. So, if there is some risk out there,
take some money off the
she might
table.
not have proper rules. Can I take some money off the table, lock it away?
Yeah, I like that.
She makes her feel better.
Yeah, absolutely. And it's all that sleep factor, isn't it? We talk about if you're stressed about it, get out. If in doubt, get out. Simple. If you're stressed about it, take the sleep factor and do what you need to do to get back into that area where you're comfortable. But then that's also why we say to put stop losses on everything, because if you've got a stop loss on it, everything, you've got a line in the sand saying if it does this, I'm out. And then you've got all the upside there, and you just keep raising your stop losses up.
Look, I mean, every week...
Which you'll read about in my book.
Well, that's right. Well, every week we talk about stocks that are going up, and then the stocks that go up, people often don't know how to manage that.
Not often.
So that's what...
all the time.
That's what the issue is, isn't it?
Oh, yeah. I'd say most of the people watching the show don't know how to manage them properly. To an exit, they can buy, but managing a trade and getting out to the exit at the right time, that's the tough part that they don't do.
Yeah.
So, but I think Marita's on the right track.
The book will really help. Yeah.
I think she's on a great track, and I guarantee you, Marita, the book's going to help you here to help you understand the downside risk and how to manage it all. But I don't mind what she's doing. I just think she's reacting a little bit to the noise in the marketplace, which she doesn't need to be.
Great advice.
Cool. Well, Janine, it's time we get into our topic for tonight, which is all about whether now's the time to get into stocks that might be cheap. And our intention is to give you some good ones that are trading below $20. So as one day, these stocks could be trading at much higher prices. Now, before we do, Janine, I really wanted to say tonight, I'm not really going to tell you any one of my extraordinary jokes.
Do you mean extraordinary or extraordinary?
Extraordinary.
Extraordinary?
Or extra.
Did you say extraordinary? I don't know about that. Very funny.
That's very funny. Harsh but true, but very funny.
Oh, thank you.
Well, you like
You've never
last...
told me I'm funny.
You're not, normally, but you did like last week's joke.
Yes. Well, Dale, the main thing is that I know that you enjoy putting a smile on people's faces,
Good.
including mine. Now we're chatting about cheap stocks tonight. And I came up with this topic after catching up with a friend I've not seen for a while. They told me that they had recently started investing heavily in penny dreadful stocks. When I asked them why, they said it just seemed to make a lot of sense. Did you get it? Penny dreadful and sense.
I'm going to give you an A for effort on that one. That was good. If it's okay with you, can we actually get into the topic?
Oh, I just thought I was too funny. I was hoping you would say that. You know, Dale, there is one particular aspect of the market that I have found so fascinating, and that is human psychology.
Only one part's fascinating?
Well, there are many parts that fascinate me, but this part really fascinates me. And part of what this show is aiming to do is to lift awareness about human behaviour. Like, why do people try to buy cheap in stocks in the market?
Well, you answered that already, as it just makes sense. Or should I say, how do you end up with $1 million invested in the stock market? Start with $2 million and invest in cheap stocks. God.
Oh, that's so true, but actually I should take that smile off my face because it isn't actually funny. We've seen so many go down the cheap road and lose their entire investment.
Now, if I may take your lead, Janine, we should be sharing why some people's psychology becomes fixed on trying to buy cheap shares below a certain price level. Now, we know human behaviour and buying cheap is related.
Yes, it is. Human psychology dictates that many will buy anything at a price they perceive as cheap, rather than something of great value. The retail industry thrives on this premise of offering customers products at perceived discounts to get them to part with their cash. But what most people miss or choose to ignore is the fact that buying a cheap stock in the stock market is completely different to getting a bargain at the shops. It is frustrating to me as to why people even think they can transfer this type of thinking across to their investments.
Yeah, I agree with you there. Well,
you were going to say I don't agree with you.
If I don't agree with you, you'll kick me under the table. But I do agree with you. But it's not just the retailer, Janine, it's the finance industry actually knows human behaviour very, very well. And they know that they can exploit it simply because people don't easily change their thought processes. And that's why cheap stocks are promoted by newsletters and tipping sheets. This is how they get people to subscribe to what they're doing. And don't get me started on brokers, I mean, geez. But let me ask you, what is cheap in the stock market anyway?
Well, that's a little bit subjective. To know whether a stock is cheap or expensive means you would have to understand what a stock is worth. Is it what the market is really willing to pay, or is it what a stock could be trading at in future?
It is not just that, Janine. People miss this part. A company trades on the market on any day based on what the market, namely the buyers, are willing to pay. Now, this price is based on all the information known to the market at the time. And people in the companies who pay their staff high salaries and who have all the resources behind them can set a value on these stocks. So how can investors think even for a minute that they know more than these people?
That annoys you, doesn't it?
Well, I'd say yes, it does. Because at best, that's ignorance, and at worst, it's delusional to think you actually know that a stock is cheap, as this implies you know its real value or future value, and that's a value the value that you determine is above what it's trading at right now. But buying cheap is not that important, or not the important thing. It's all about the direction of price now and into the future.
So true. The best way that you can determine whether a stock is likely to be trading higher or lower in future is by being able to read a price chart that helps you determine direction and strength and allows you to see what these people with loads of resources are doing.
You're right on that, honey. Well, that one. Fundamental data is great, but it can often lag what is actually happening to the price of a stock.
Now back to looking at cheap stocks on the market. Now today, you could buy stocks from under 1 cent to well above hundreds of dollars, and both can be seen as expensive or cheap. Also, a $5, $10 or even $20 stock could end up doubling in price or even trade at $50 or $100 in future.
Now, remember there was a time when very few investors were prepared to buy any stock that was trading above $100, Janine. And so companies would do share splits where they would increase the number of shares on the market and then drop the price, and this increased the number of investors interested in buying the shares. But this has changed in recent years.
I can recall CSL doing this years ago. Now, Dale, we should not be too hard on new investors without the right guidance, as there's a heap of stuff on the internet about buying cheap stocks. This fuels their mindset into thinking that buying cheap is the way to riches, as it plays on the greed of individuals. But when you read about cheap in the stock market, it often means the penny dreadfuls. In most cases, these stocks are the ones that trade at cents rather than dollars and are highly illiquid. Often the companies that promote them stand to directly benefit in some way.
Oh, that is a worry. To the uneducated, it feels like an opportunity to get in on the ground floor at a discount with the opportunity to watch the share price grow thousands of %. And this is what causes FOMO in people. So is this type of stock a bargain or cheap? Well, for the vast majority, I can guarantee it's not an opportunity. It's more about the irrational behaviour investors being lured into the market where their personal risk is highest and causing them to gamble with their money. Now, worse, information that purports to help them buy cheap stocks is mostly poor or not in their best interests at all.
Do you think the attitude of investors is changing?
Yeah, it is. I think it is. I mean, the wise ones very quickly learn what we've just mentioned and so change pretty quickly. And many of the others learn over a period of time that if you buy cheap, you often get more than you actually bargained for. So remember these 3 important points. Number 1 is, can I say with 100% certainty that it does not matter what the price of the share is before you buy it.
2, what is important is how far the price is likely to move and how probable that move is likely to be.
And 3, we have shown time and time again, you can find really good stocks that have a higher probability of success where you can make tens, hundreds or even thousands of % increases. The tech stocks and many mining stocks have been really good examples of that.
What a perfect segue, as it is my turn to say it's time to get into the charts. Let's take a look at some of the best stocks we have identified that are currently trading below $20. While we're not suggesting they are cheap as such, these stocks have the potential to be trading higher, and this means this could be good value. So let's take a look at the opportunities and the risks.
Okay, now you've got 5 stocks.
There are 5 stocks. I could have picked 10. I had 10 on my list, but I
could
knew...
probably add another 10 on top of that.
But the really interesting thing about this research and looking into some of these stocks is that I found a huge majority. I found there were 200 stocks to start with that I had to go through. And of those, there was a massive percentage of those were ETFs.
And what does that tell you?
Well, that tells
under
you...
$20 bucks.
Yeah, they're pricing them in the right order, aren't they?
Yeah, they want everybody to buy ETFs under $20 bucks.
To try to match the consumer that doesn't know.
That's what I was saying before. The financial industry know that. They wouldn't want an ETF at $300 because nobody buy it, because everybody thinks more shares.
But then think about Berkshire Hathaway. Everyone wants to own those shares.
Yeah.
Or has
People
in the past.
telling me that was expensive when I was trading at $2,000 a share. What's a few $100,000 now? Something like that. It's massive. I don't even know.
You haven't got one share?
I can't even count the zeros on the end of that one now.
You just need one share.
And you just need one share. And it's done really, really well. But I think people think the more shares I've got in a company, the richer I am, but it's not. And that's why we're saying the price is not relevant.
That's right.
So you don't need to, it's about having the quality of the share. So these ones you're going to talk about a quality, yeah?
Let's get into this. I'm not necessarily saying that they're the highest quality stock, okay? So what I'm saying is there are some, and I've brought the first 2 up because they're the least liquid.
Okay.
Of the whole lot.
So these are what?
Now, I've got Life 360, and this I brought up on purpose because I know you've talked about this
a couple of times. Yes, I do
on
like
previous
this stock.
shows. Now, what I wanted to talk about first of all, this is about liquidity. So looking down here, if I drag my crosshair down across the chart, we can see liquidity of the stock. It's probably about 5 million a week, right? So 5 million, and then it's trading at about $5.
That's 25 million a week.
25 million a week. It's reasonable enough liquidity for an individual to be able to trade this share and make some money out of it. Stocks that are trading at lower than that sort of level can often be hit and miss. So it's good to see that Life 360 is
but
now.
Janine, I can buy a stock for 0.2%.
You don't need to. The point is that I was looking at stocks that were trading above $5. It just so happens that Life 360 is trading above $5 at the moment, but a couple of weeks ago it wasn't. So it managed to get into the mixed.
Okay.
Look, looking at it now, I'd still look, if people are looking at this share, you're not in the stock, I'd still be waiting for it to pull back, to have a pullback. I'm not sure if you've got your trend line down in there, Dale.
Yeah, there is.
Okay, so like trend lines you're saying would have actually allowed an entry in there already. But now we're just waiting to see if it pulls back. And a real important level for this share could be somewhere between $6 and $7.
It will, yeah.
So if it reverses there, pulls back and it looks orderly, then it might then move on higher. So we've just got to watch that.
I like this one long term. I do like it long term.
Yeah, so look, I picked a few stocks that had a really significant pullback.
Yep.
And the interesting thing about this was, unlike other weeks where I've talked about a particular sector of the market, and I've been, it's really easy because you can just pick the top, 10 stocks in any sector, look for the most liquid, the biggest shares, and that's how easy it can be for investors to reduce the field.
I agree.
When you're talking about trying to pick stocks between price points, you've actually got a whole lot more stocks that you've got to deal with.
Oh, yeah.
So that's what we were saying before about not necessarily worrying about the price of the share. There are other more important criteria.
Well, if your first filter is price, then you're doing the wrong filter.
Yeah, well, that's right. Well, so we're doing the wrong thing then, aren't we?
Well, yeah, you're breaking the rules. Okay.
Okay. Just to be a little bit, to challenge the thinking. That's what we're aiming to do tonight.
And I know what you're talking about because, I mean, it's if you start going, I want to buy stocks under $5, that's the wrong filter straight away.
Yeah.
It should be, I want to buy quality stocks first, not they're under $5, because I can guarantee you there's people watching us tonight that still haven't got. It's not about the price of the share. They're still going, but I like buying shares under $1 and I like buying shares under 50 cents because I can make so much more money on them and I've got more shares. That's BS thinking. It really is. It's poor thinking. It's really and it's bad trading.
Yep.
So you're not saying that. You're saying, okay, I want good stocks, but you just set a filter they had to be above $5.
They had to be above $5. I could have narrowed it down to a different range if I wanted to, but I just wanted to see what came up.
All right, so what do we got now? We've got Codan.
All right, Codan, we've
Another
got.
good stock.
So we're just looking at the liquidity of Codan again. We'll have a look here, bringing that across there. We can see that we've got about, about 2 million, 2.5 million a week, 2.6.
2.5? Yeah.
Yep, multiply that by $9 at the moment. And there's reasonable volume in there for an individual to trade a share like this. So still, it's another example.
So around 20 million a week.
And it had a significant correction already. But it doesn't mean that it won't fall further. At this stage, we're not completely certain of that, but that's the risk with any share that you buy that's had a fall. You've just got to look at the opportunities and weigh up the risks against the.
But that is looking nice, isn't it?
Positive side of it, but it could end up trading between $10 and $12. In the near term, that's the opportunity with it.
Yeah.
I'm not necessarily saying that it's going to double, but at some point it could.
Yeah, absolutely. I don't doubt that this stock could easily double, and even triple over the coming year or two.
Now, in saying that, of course, if it trades below this low here in June 2022, obviously, you wouldn't be staying in there because it's more than likely going to keep falling. And if it did that, it's going to head down all the way to $4. Yeah. Okay, so that's something to bear in mind. Now, AGL, this is an interesting space with AGL because these energy providers are really stuck in the meat and the sandwich at the moment with what's going on with government regulation.
And how do you mean by that?
If government steps in and they try to manipulate or change or restrain or restrict in the marketplace anything to do with the business's operation, then this is where the market says, well, there's uncertainty here. Unless we know what the outcomes are going to be, then...
So you're talking with something like an AGO, you're talking about them being like moving towards sustainable energy.
No, look, I think that's the brilliant part of what they're doing.
Yeah, I know that, but I'm just saying if they, let's say the Greens go,
with the question
we
around,
want this to be accelerated and happen in 5 years, and that's not possible. Are you talking about that, or are you talking about something else?
Well, it's a combination of things, and the gas market and what's going on there as well at the moment.
I know we're getting stitched up on the gas market, aren't we?
Well, look, I mean, over years we have been, unfortunately, because Australians have been paying way more for their gas than what they should have. But that's a whole different story. We could do.
Well, we are, and I on the weekend I was looking at the newspaper and I was saying the Greens in Victoria are trying to get a bill through, so to have houses not being able to have put gas in their houses and residential properties within 5 years or 5 years.
Right.
It's not through. They're trying to push that through. So the agenda's there. They're trying to do that. But then gas is, in theory, should be quite a cheap source for us for energy, and to me, AGL is there. And so this is going to affect them and lots of other companies.
Look, I think there's still a huge opportunity for AGL because of the direction that they're going into. We've said all along, every time somebody brings up AGL, and we can just look at the monthly chart to get an idea, it's stuck at the moment. It's trading within a range, but we see significant potential for it down the track. It's just not right now.
Is this a takeover target?
Possibly. I think there's a potential for it to trade up to around $10 in the short term, but it could get stuck there temporarily.
I love this company. It's really good, and I think it's primed. It's really set to have a good run. But the point is, it's in a slightly challenging environment at the moment.
That's exactly right.
And that's what you're saying a bit. It's like it's on quicksand. It's on shaky ground at the moment. Not from a company's point of view. It's about a good, solid company. I'm talking about regulation, and the environment that's happening at the moment is shaky ground a little bit.
Yeah, I think AGL are doing some great things. So just continue to watch this space is what I would say.
Yeah.
Yeah, so that's AGL. Then we've got QBE. Now, people say, why would you pick QBE? It's an insurance company.
Why would you pick QBE, Janine? Like, seriously, why would you pick this stock?
This is what we debate about with our investment team when we're looking at different areas of the market, whether it's going to be strong, for what reason, and whether there's going to be, what are the consumers doing? Because this is hugely affected by the consumer market as well as what's going on with inflation. So look, I would say an interest rate.
Because I'm part of it, the investment team, I know we generally don't like insurance stocks.
That's right. So we generally don't like insurance stocks, but QBE was once a great company.
It was.
It traded really well. And my view is always, it doesn't matter what a stock is doing, it can always become a great company again.
But what's going to make it a great company?
What's going to make it a great company at this point, I don't know. So you're not actually buying. This is what reason I raised this particular one, because people buy on the premise that it might be great again.
Isn't that what you're talking about earlier with the price of a company? People say, how many times have you had somebody say to you,
it's traded at $20 in the past, but it's now trading at $5, I can get it cheaper. Is that what you're thinking?
Well, no, I'm not sort of saying, you're saying, look, why would you buy Telstra today? Somebody goes, I want to buy Telstra today. And you go, why? And they go, because I think it's worth $10. And you go, how do you know?
Yeah.
It's worth $10.
Because it's traded at $10 in the past.
And it's trading at $5 now. And how do you know it's worth $10? And they go, well, it's traded there in the past. I went, but that doesn't mean it's worth $10 now. How do you know it's worth $10 right now? And they really give you wishy-washy answers.
Well, the market is telling us that QBE is worth around $12. That's what the market is saying.
The market is saying. So you're talking about the big end of town and putting out the reports.
I'm saying that if QBE was worth more than that, the big end of town would be paying more for it right now.
Correct.
And that's the point you're making.
Which is exactly the point you're making earlier in the script.
That's right.
The price it's trading at is based on all that's known about that stock right now. So the industry is pricing it at that.
And I remember when there was all this talk about whether there was going to be a potential takeover of QBE. Remember that? It just came out. There was a flash in the pan. Somebody released something and everybody tried to jump on it and the stock rose strongly, but it was just a rumour.
Yep.
So, look, a stock can always get taken over, and I'm not suggesting that there is one here, but look, I can see this as being a really strong level for QBE. It's been stuck there, range bound.
It has been. It's been
since
really
2011.
Terrible.
It's just been stuck. And I did some analysis that indicated it was likely to fall further, and it actually has. COVID helped that.
Yeah.
It fell through the floor here. There's a potential for it to rise. I think it could end up trading somewhere between $16 and $18, but it's got to break through all of this nonsense first. So it's got to get through around $13. But in the current environment, with the concern about inflation, interest rates going higher, if it trades below this low here on the 22nd of July, then you know that it's going the other way. So just let the big money tell you the direction. Don't just surmise the stock's going to do something.
Look, Tim, in my mind, this should be a $20, $30 stock. It should be, but it hasn't been performing at that level, and there's probably a lot of reasons why it hasn't performed at that level.
Well, look at all we've had floods, we've had all sorts of catastrophes and disasters around the country that have affected it. Now, insurance companies do protect themselves. So
they push off their risk.
That's right. So reinsurance allows them to do that. But, it depends on how well they're covered, what potential disasters could come up in future, and how that affects the company.
Because we've seen AMP that's been slammed and slammed and slammed.
Oh, but that's for a whole lot of different reasons
as well. For a whole lot of different reasons. But again, insurances, but really, really slammed. So what's going to make QBE something that's attractive to the market?
Look, I don't so much care about that. It's more about whether the market suddenly gets behind the stock and it starts moving higher, that's really the thing to look for, I think, in the short term. But if the inflation situation actually settles somewhat next year, then I'd really be having a look at it.
Because I know my insurances are getting more expensive. Car, house, they're all getting more expensive at the moment, but is that meaning they're making more money, or are they just raising it because their costs?
Look, one of the discussions I had with a gentleman that we interviewed for Talking Wealth, he was talking about how people are so underinsured. It's not funny right now.
They are.
And so, if people are underinsured in the main, if a large percentage of people are underinsured, there's a huge potential for these insurance companies to capitalise on that.
I was talking to a financial advisor here in Melbourne last week. Same thing. Our discussion was recorded for Talking Wealth, and he was saying the same thing. He said, are you over or underinsured? And most people are underinsured because they treat insurance as a cost.
Yeah.
Whereas I actually don't. I treat insurance as peace of mind, or it's an investment in peace of mind. And, especially things like life insurance and income protection insurance. Because I have to think about, well, what happens if I, get clocked on the head and I turn my toes up? What happens to my family, my wife, everything? What happens? And to me, that's my insurance policy. It makes me feel better. Yeah, it's a cost, but not having it would stress me out. You know what I mean? And so, a lot of people, like self-managed super funds, how many of those don't have life insurance on them? I think it's about a third of them have life insurance. Whereas if you have if you're in an industry super fund, you automatically have life insurance part of your component.
Death and disability.
Yeah, your death and disability on top of that. But people with self-managed super funds don't have that. So if you have a self-managed super fund, go and talk to your insurance people, please, because you could be missing out. It is tax deductible in insurance in the self-managed super fund anyway. But I digress from QBE. I do like this stock. It has annoyed me for many, many years, but I do like it.
Now, there's a stock I haven't looked at for years. I haven't actually done a great deal of research on this share other than look at it technically. So looking at, there's a massive level of resistance right now, at this all-time high. And this could, for some stocks, be absolutely diabolical long-term for the share price. Now, I'm not saying that that this stock is going to blow through to blue sky, but if it does go through to blue sky, there's significant upside above that all-time high that occurred back here in 2012. So I'm just watching this one with interest to see whether it manages to do that. If I look at the weekly chart here at the moment, we're seeing it move back up to fill this gap on the chart where it was sold down. This is what's going to present some significant resistance. You can see all those peaks there across here at around that $13.50 mark, even before it gets to the all-time high. So let's just watch this over a number of weeks and see how it unfolds. But if it manages to hold up and it doesn't take out that low, it could be a nice little one to watch.
It could be a nice, really, really little one from there. But obviously we're expecting a bit of a pullback on our Australian market over the next 1 or 2 weeks. We're up 7 weeks in a row at the moment as of last week. Now, we haven't done that, and I was talking about that on my market report yesterday. We haven't seen that kind of sustained green bar after green bar after green bar. We haven't seen that in 4 years.
Yep.
Haven't seen it in 4 years. So that's why I say to people why we're expecting the market to pull back. But how many stocks are you seeing at the moment? Good stocks that are relatively cheap, if we want to talk about it that way, or they've come off or they're looking really good, a little really good buy, but are setting themselves up.
I don't think we should be talking about relatively cheap.
Well, what is relatively cheap?
Because that's what this show's all about. We don't talk about it like that.
We're not cheap. But Buffett says price is what you pay, value is what you get.
That's a good
So if you're
point.
just buying on price, like whatever, it's under $1, so I'm buying it on price, then you're buying on the wrong thing. You should be buying value. So how about I change my wording and saying there's a lot of stocks out there that are good value right now that I'm seeing, and I'm seeing a bucket-load of them that are really good value right now that are setting themselves up for a good buy. I'm just sitting on the fence a little bit at the moment because I'm still waiting for that market to come back a little bit to see where the strength in the market is and where the buyers and sellers are, which is where,
So it's about buying good quality stocks if you can get them. And I'm not saying that this is the top of the pick, because if we're talking about stocks that are the best quality in the market, we're going to be talking about the top 50 shares.
Yeah, I'm just talking about good valued stock because there's plenty of stocks in that sort of 50 to 100 too in the market that are really good value at the moment, that are looking like they're setting themselves up for a nice run. Now, I still do expect our market to have a better run into towards Christmas and move up. A little bit more short-term volatility, the market moving down. But I think what really surprised me was QBE in this. That was the one that really surprised me. I didn't expect that. I was expecting another type
Look,
of stock.
there are 3 other stocks that I would have put in here.
And what are they? I'm sure I'm asking
One
the
of them I
questions
couldn't put in here because we're looking at it as a buy.
for our fun.
Yeah, so I can't put that one in
For
there.
our clients, okay.
Yeah.
Okay, so we're not looking at that one, but can you whisper it to me?
No.
Okay, I'm not allowed to tell anybody. So I tried, everybody. I tried. What was the other ones?
Oh, look, the other ones, just off the top of my head, I can't remember now. I mean, like I said, I had 10 to start with, and I'd narrowed it down to right down to about 7 or 8. But I knew that you wouldn't let me.
Okay, your pick of these 5. Which ones are in order?
Look, based on liquidity, I do like this one, but it needs to trade through the all-time high for me to be happy with it.
Okay.
That's my first one. I like AGL. However, I would say that it's got a short-term resistance just overhead, so it's there's not enough upside before resistance in the short term.
Okay.
If I was looking at the 2 smaller stocks here as one for an opportunity, I'd say that this one, Life 360, is an opportunity. But the issue is if you weren't already in it, you need to wait for a pullback.
Wait for pullback.
Yep.
Cool. Well, that's it. So looking at the market right now, as I said, Janine's got those 5 stocks looking really, really good. She's given you her picks for that. But again, don't buy cheap. If you're buying on price alone, then you're not really following up with what Mr. Buffett says. Look for value first and foremost all the time. Well, that's it for our topic right now. Now, before we do get into our next email, given you're at this point in the show and still watching, it means that you like what we're doing. So make sure you hit that like button right now. And Janine and I will sit here and wait until you do it. Just go down there, thumbs up, click the like button. Great, you all done it now? Now I hope you have your phone ready and have been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning questions. Now it's time to get dialing. The number you need to dial is 03 for Melbourne 929 09988. That's 03 for Melbourne 929 09988. So get dialing now.
While you call us, we will get into answering the next question, so call now. Now we have a question from Andy. Hello, Dale and Janine. PBH has caught my eye. I'm looking for an entry price and thinking $4 might be my trigger. How does the chart look to you, experts? And would you agree or disagree with my entry price? Thanks, Andy. Interesting stock.
I know.
PointsBet. Yeah, let's have a look at that.
PointsBet. He's looking for validation. Everybody looks for validation, don't they?
Well, look, he's curious. He wants to know what we're thinking. I think that's fine.
I like to know what I'm thinking. Sometimes I don't know.
All right, then.
What are you thinking?
I mean, this would actually be one of those stocks that I would, if it managed to trade up over coming weeks, it might fit into my cut-off criteria of being above $5.
Yeah, but I mean, that's an arbitrary figure for you.
It is an arbitrary
figure. It's more about liquidity and everything else.
Look, I think this stock could really hit its head somewhere about there anyway, around $6, possibly $5.50 to $6. But in the short term, I think it looks good.
Yeah, I think it looks good too. I want to say to people, we buy stocks under $5. Like I do that all the time. So it's not something that we're saying $5 is anything under that we don't look at.
That's a good point.
We are buying really good value. I remember I used to buy a stock that used to go from 1 to 3 and back to 1 and 1 to 3 and 1 to 3 and we'd make a lot of money out of it. But it was a big stock and it was highly liquid stock, and so you can do that with some stocks. So I don't think.
But these days, most of the stocks are trading at higher than that.
Higher than $5. But PBH, what else you got to say about it?
All right. PointsBet.
Okay, he's saying $4. You're agreeing with that?
Yep. Oh, look, I'd just say that, you've got to set it, watch your stop loss, because the challenge is, let's just have a look and see
Do you want to make that
how far it is from that low there. It's actually 54% from that low. Now, it doesn't look it, does it?
Yeah.
It's quite interesting to see that.
There you go. Now we can see it.
Yep. You don't need your binoculars.
I've got my glasses on, but I needed binoculars.
So, setting a stop loss could be quite a challenge on this type of share given the way that it moves and the volatility of it. But it could shoot up quite quickly to around that $4.85 mark. I think there's a potential for that.
Well, it is, and I think it's good because you had a lot of indecision through here, but now these last week and so far this week only a couple of bars. I think it's looking quite good. So currently, obviously, it's closing at $3.90, so it's near his buy price. I don't disagree with what he's talking about. But yeah, where do you set your stop loss? And that's the thing is, even if we just get rid of that, can I just get rid of that?
Yeah, go for it.
Where is my delete button? There it is. Looking at what it's moved here, from where it is currently, even just down to the next bar, it's down 10%. So it does move it can move quite quickly before you get out of it, and really just need to be careful about that and making sure you've got a good stop loss on it. So
that's a really good point. No, that's all.
All right, well, we do have a caller on the line. Welcome to the Australian Stock Market Show. You're on with Janine and Dale. Who have I got on the line?
Hi, it's Chet.
Hi, Chet. Welcome to the show. We haven't had you on our show before, have we?
No, you haven't. I've been watching the last couple of weeks. I've just finished reading your 2 books, Dale.
Oh, fantastic. Thank you very much for that.
Which I've enjoyed doing. And I guess, look, I just have one question. What is your motivation to sell the course to people when clearly you have the ability to make lots of money for yourself because you know what you're doing with the stock market?
Yeah, absolutely. Absolutely. I just want to help people, and I think, you know how many times I've been asked that question over the last 25 plus years?
I don't know. I'm keen to know.
I mean, your passion has always been to teach people. That's what it was from the beginning.
Trading's boring, can I say that? It's making money is really boring. It's like sitting at home on a computer, and trading full time is not about sitting in front of your computer all day long making money. I make money from the stock market from trading it, and that's not the issue. It's more about personal satisfaction, and I think, and I used to say to people, well, why does Richard Branson still work, and why does Bill Gates still work, and why does Steve Jobs still work, and why does Warren Buffett still work? It's because we love it. I love what we do, and I love the market, and I love working with Janine, and sitting at home in my office doing some trades, and then and the other part was I actually retired when I was about 38, 39, something like that. I retired, or pretty much. I think I was working 2 half days a week and I was trading. And I went to go and play golf, and I had nobody to play golf with. I had nobody to go to the beach with, and all my friends were still working. And I went, well, there's not much fun, is it? Like, I'm on my own, and like, what do I do? And I've had other traders do that as well. And so, the option to be able to help people and write the books and help people like yourself, that's what drives me. And, and when you get people ring up and they say, hey, Dale, you changed my life. And I go, how did I do that? And they go, just your books in your book really changed my life. And I've even had people ring me up and say, you've saved my life, because they were just, I won't say destitute, but psychologically, emotionally, physically and financially, they were just bankrupt. And by just reading my book, it got them back on track again and started, enjoying things again, and actually give them some positivity. And they're really, really nice calls to get. And, and during the GFC, remember during the GFC with my first book, How to Beat the Managed Funds, how many phone calls did we get and emails we get from people saying because they've read my book, they missed the GFC.
Yeah, exactly.
We had bucket loads of those. And to me, that was really nice. And I just love it. As you see, Janine and I just love what we do, because we don't need to do this. We really don't. We both could retire. We could have been retired 20 years or more, but I think we would have got bored with each other. But no, we wouldn't have. Cool. But thanks, nice question.
Well, we voted, didn't we, to keep this going, the education side going, and to make it better and higher quality and the best it could possibly be.
I don't know how many times I've tried to retire and the staff keep saying to me, Dale, you're not retiring. But anyway, we love it. That's the thing. Anyway, we do need to move on from our next email. And our next email is from Harry, who says, hey, Dale and Janine, cheers for the shows. I love the professionalism you both have and energy that seems to freely bounce off each of you, and a great example of what a healthy and successful business relationship should look like. This person must have known we got that quilla before that. So this must have. Anyway, he says, my question is about Imugene. I have been fundamentally following it since 2019 after heavily buying it at 1 to 3 cents through 2019 to 2020. Now, fundamentally, the future looks bright. I'm just curious, what are your thoughts for the short to medium term chart-wise? Keep being great. Regards, Harry. Good question, isn't it?
Isn't it? And this is a really interesting stock, Harry. And the fact that you were talking about that you were buying it, and I think you said between, was it 1 cent and 3 cents from 19 to 2020. Just look at the chart and where it was trading.
He has more intestinal fortitude than I have, I tell you.
Okay, so it's 10 times, right, if it was 3 cents. Okay, so it sits down there. So we're now talking, there we go, just drag that out the way.
He's made an absolute mozza on this thing.
Okay, so first of all, the stock, what was really interesting to me is how he's bought it here, and then he's probably watched it fall initially and then take off. So he was up 121% here, and then it got to 300. What would he have been thinking here? 2,000?
But then how much has it dropped since then? So we're talking about 62 cents down to about 14 cents?
Yeah, so in terms of that, what is it, half? So he's lost 50% of what he
but
had.
Even earlier, it got right down to, around 14 cents.
Yeah.
So you're watching it fall and fall and fall. I mean,
and there were some exit rules, like your book probably, I don't know if you can get a trend line up there, but that would have been a place to look. And then there's some other rules that it could have gone in there. But what should he do now? That's the real question, isn't it? Do we like it now? It's going up again. That's the main thing.
Well, there's two things that sort of bothered me a little bit about his email. One is that he was buying this stock at 1 to 3 cents, and he must have had really good fundamental research, because that's cowboy territory to me.
Yeah.
And the second thing is he said heavily buying, and that really worried me, because heavily going into a stock, something like that really would stress me out. And I'm a risk taker, but to me that's really high risk. So that's the other thing. But he's hang on, and he's made some really cool money. Right now it looks like it's going up.
Look, in the short term, if it keeps rising, it could head back up towards that 50 cent mark. But if it trades below this low here in July, we're likely to see it take off to the downside. That's what I'd say.
Absolutely, good. Absolutely.
All right. It looks like we have another caller on the line. Welcome to the Australian Stock Market Show. You have Dale and Janine on the line. How are you this evening?
Very well, thanks. How are you?
Good, thanks. And Ravi, is it that I have there?
Yes.
Hi, Ravi. Have you
correct.
called into the show before?
No, never.
Oh, congratulations
It's the
on
first
making
time.
your first call. Well done.
Yeah, thanks. Yeah, I was listening to your the show today, and the shares that you were talking about $5. Should I, when we look at shares like that, should we also look at it in terms of ASX 200? Does that make any difference, or it doesn't matter?
That's
That's
a great
question number one.
Yep.
Yeah. And number two is I have been holding LKE for a while, so close to 1 year. So I bought around 60 cents, and now it's at 134, but it went up to 160 this week. Why there is this ups and downs on this particular share? I just want to get your feedback.
Fantastic. Thank you very much for your two questions, Ravi, and great to have you on the show. We hope to have you call us again. All right.
Interesting. So two questions.
Two questions. One is about that we were talking about stocks with above $5.
Yep.
And should he look in the top 200? So I really liked his thinking in that you can limit your search to certain indices on the market,
correct. Absolutely.
which is a great idea, because then that will filter out all the rubbish underneath it.
Yeah, a lot of people don't know how to do that, and that's. I mean, last week I was doing a recording for our students and showing them how to filter down and create that watch list of stocks, and I showed them 3 different methods to do that, to simplify that whole thing, because how do you need an elephant? one toe at a time, But, how do you 500 stocks? What do you do? I do like it. I would just go to the top 100, Ravi. I really would. I wouldn't go out to the top 200. When you get outside the top 100, the liquidity starts to drop off like a stone, It really does. And so the top 100 tend to be a lot more liquid and a lot easier for you to trade. But I don't have a problem if you've got the knowledge to go outside the top 100, but you really do need to have good rules and good strategies around that.
Yeah, I've got a rule for you. Don't try to eat elephants. That's just a disgusting thought.
They're a bit tough.
Why did you bring that up?
Can we have a look at the stock?
Do you eat a lot?
LKE. No. I'm just using it as a metaphor.
It's terrible.
Okay, let's
Better choice next time.
That's probably better than most of your jokes. Anyway, let's get going. Okay, so he's been holding it for a month. I've drawn a line on where he bought it.
You're helping me out here.
He's held it for about 12 months. He bought it around 60 cents. He's gone on the roller coaster ride. It's shot up and shot down. It got down below what he paid for it, and now it's gone up again. So that's probably why he's ringing.
Look, before I answer this question, I really want to go back and have a look at the daily chart. Now,
if you must.
Yeah, just because of the volatility of this share, the risk is in the short term that it could end up trading back at $1.
It could. Most definitely.
In the short to medium term, it could be trading closer to $2. On the upside, if we look at the downside risk and then we look at the upside, those are the two scenarios. And the reason that's so far apart is because this is a volatile share and it's low liquidity.
Yeah.
So this is what makes it much more challenging to choose what's going on. So we won't know whether this stock's going high. In theory, it should. After such a huge bar like that, you'd expect it to go up for another couple of months at least.
You would, yeah.
But in the short term, be prepared for another volatile ride. That's all I can say with this one. And I guess, if you're in profit on a stock, why wouldn't you take some money off the table? I'm not saying Ravi should, but if I was holding a stock like this, I would have already taken some off.
Well, it depends on how much you put into it and everything else. But I'd agree with you because he's ridden the roller coaster on it, which shows he doesn't have good rules around buying and selling, but he's made money. So, let's protect your profits and put some stop losses on. But
great questions, I'd say, Ravi, and thank you.
All right, we do have another email, and the next question is from Jacob, who says, "Hi, Dale and Janine, I hope you're both well." Yes, we are. Thanks for asking. I'm asking about 4 stocks which are setting up well. You can choose which one you'd like to talk about. The stocks are James Hardie, Wesfarmers, Zero, and Fisher. I think it's FPH, Fisher and Paykel. Is that the right one? Yeah.
Yep.
I'm waiting for them to set up on the monthly chart before taking a trade. What are your thoughts? Kind regards, Jacob.
That's really nice of Jacob to let you choose which one.
I did, and I went,
Eeny, meeny, miny, mo.
Well, I thought, well, I've got to stick to my guns and go to the first one.
Okay.
First one.
You followed the protocol.
I was so tempted to talk about Zero.
Yeah, okay.
So tempted.
All right, so looking at James Hardie, this is the chart long term. I mean, it's just incredible how the trajectory of James Hardie since COVID and how it accelerated away, because nowhere in history has it traded like that.
No.
That we've seen. And then it's just come all the way back to where it was trading at pre-COVID. Fascinating. So we could see this stock rise further. There's a further short-term potential upside on the share. You just obviously be watching closely if it trades below the bar of last month. That's all I can say from a long-term perspective. So looking at the chart on the shorter term, an actual price point for the potential somewhere between around 42 and 44 if it does continue to move higher.
So you like it?
In the short term, but it's just not, I like it for a short-term trade. That's basically it.
Yeah, I mean, he didn't tell me whether short, medium, long-term or anything else to do with it, but I did like the 4 stocks he brought up. I thought he's doing okay.
Good companies, good choices.
Companies, good choices, so I did like that, but I thought I need to stick to my guns. First stock code, you're right, that's what we put in every single time if you give us multiple ones, but anything else you want to add?
No, that's fine.
Other than you've done a great job, Dale. Thank you very much for asking.
Well
All right. Okay. Well, that's our thoughts on James Hardie. Thanks for the pat on the back, Janine. I want to thank everyone who's taken the time to comment in the YouTube comments or has taken the time to give us send us an email. We really do appreciate your feedback.
You've been asking us questions, and each week as we ask you for your thoughts, last week, actually, we asked you, do you believe that BHP's share price will rise to a new all-time high next year, and why? If not, also please state your reasoning. There were some great responses, and we're not just about presenting one side, so here goes. Thank you to Airbnb, who felt BHP will go down. The US will not stop increasing interest rates until commodity prices come down. Interesting perspective, wouldn't you say, there short term?
Interesting is a good word.
We agree that there could be some further short-term downside with BHP. However, long-term, we're bullish on BHP. So thank you so much for your contribution to this whole discussion. We particularly love the response from Aidan, who clearly has a great sense of humour. BHP's share price, my daughter, who is 7, said it's going to go to the moon. My son, who is 14, reckons $60 by August next year. I'm torn between $50 in the world if the world recovers, or $30 if it keeps going wrong around the world. Keep up the good work. What an awesome response that is, isn't it? Gorgeous. Please thank your children for their great insights. We loved that you had a view depending on different situations unfolding, so that was really important. And that is exactly the way to think about stocks, rather than just having a fixed view. We'd love it if one of your children is correct, though. Thank you all so much for your comments. This week's question is, get ready, how do you keep track of your stock purchases and track your portfolio return? Come on, everyone, join in and get typing. Please write your answers below this video in the comments section. If you're listening to us on a podcast, you can still send us an email with your answer. Before you do, give us a 5-star rating and review on whatever podcasting app that you're using.
Now, if you enjoyed tonight's show, then give the team a big thumbs up. That means click that like button underneath our video to let us know that you've enjoyed the show.
If you want us to answer your questions, then watch our show next Tuesday between 7 and 8 p.m. pick up the phone and give us a call, as we would love to chat with you. If you're not able to watch live, you can email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au, and remember to include Wealth Within Live in the subject line.
Okay, so we really appreciate your support for our show, and you show your support by subscribing to our channel and hitting that subscribe button now.
Well, that is it for tonight's show. I'm sad about that. We do hope you enjoyed what we presented tonight. We've so enjoyed receiving all of your emails, and thank those who called into the show. We love the opportunity to chat with you personally.
As always, thank you for joining us tonight. We hope you have a fantastic week. But for now, goodbye, good luck, and good trading.
Bye for now.